Good morning, everyone, and thank you all for being here today. As Karen said, I'll be your presenter today. My name is Eric Akbam, and I'm a commercial account manager at Desjardins. So they will be discussing financing solution and how financing requests are evaluated as the financial institution. And I'll also touch on some of the program and resources available to you entrepreneurs in Ontario. Before we go briefly into the presentation, I'll just give you a little background of myself and what I do at Desjardins. I've been working for Desjardins for the last 7 years, and I've held several positions through my career. As I was saying, I've been with Desjardins for the past 7 years, and I've held several positions with the case. So, including from the position that I've had, I was a financial advisor, I was a wealth management advisor, and now I'm an account manager, meaning that I deal with businesses. And all these experiences have allowed me to develop an understanding of both personal and business financial needs. So that's the reason why I'm here today and trying to educate you on how we Desjardins can help you, but what to look out for when you requesting for financing. So um, one thing that I've also learned over the years with many entrepreneurs is that you guys as entrepreneur, you know how to manage your business, you know how to operate your business, right? So we're not those experts. We will not come in and tell you how to do that. But what we've noticed is that when it comes to the question of financing, it becomes a taboo because a lot of people are not familiar with the different step to how to go about getting financing at some of the financial institutions. So my goal today is to really help you guys make that process easier to understand. So before we look more in detail at the financing solution that is available to you guys as entrepreneurs, I'll give you a little bit of an understanding of what Desjardins is and what we do for the community. So, for those of you who are not familiar with Desjardins, we are the largest cooperative financial group in Northern America. So, with a strong presence in both Ontario and Quebec. Desjardins is a financial institution. I myself do speak French. And so, because we are French, doesn't mean that we won't serve businesses in English. We can perfectly do so in both languages. And what really makes us unique is our cooperative model. So, unlike traditional banks, they're owned by shareholders, and us at Desjardins, we are owned by our members. So, our members are you, me, everyone that has an account with Desjardins. So, this means that we not only focus on profitability, but we also focus on our members contributing to the economic development of our community. So, or basically, that's to say that our approach goes beyond simply providing financial services. We aim to build a long-term relationship and support both individuals and businesses throughout their growth journey. Okay, so now the part of the sorry, I have many screens here. So the source of funding. So one thing that's important to understand is that there is not a single financing solution that works for every business in the market, right? So the type of financing will usually depend on the company's goal, what stage they are, their stage of growth, and their operation needs. So the first one that we have is the line of credit. For example, so the line of credit is it's similar to what you guys will have on I like to call it retail side personally, because personally you can also have a line of credit. Sorry. So a line of credit is on the business side is commonly used for short-term cash flow needs, right? You invoice a client, for example. This client will take 30 days or 60 days to pay you. How are you going to be bridging that gap between the time until you invoice your client and the time until you receive you have to pay for your employees? So that's where that line of credit can come in and fill that gap and help you fulfill your short-term expenses, right? Anything that's short-term, we're technically looking at 0 to 12 months. Anything above the 12 months is considered long-term. So, and a good example of this will be a retail business preparing for the holiday season, for example, right? They may have additional, they may need additional inventory before the sales come up. So a line of credit can bridge that short term and help them with their cash flow needs. Any questions so far? No? The next one that we have on the list is the conventional term loan. So the or term loan is generally used for larger, longer term investments such as renovations, business acquisition, and equipment purchase. So this is where, like I had mentioned, so anything above 12 months is considered long term, right? So it's not really advised for you guys as entrepreneur. For example, you want to buy um, a machine for an equipment, a piece of equipment that will help you with your operation needs, and you want to put that into a line of credit, right? So because the line of credit is to help you with your cash flow, but anything that it's for a longer term, you're gonna be using that equipment for more than 12 months. It's always suggested to put that into a term loan. Okay. Lastly, we have the commercial mortgage. So commercial mortgage it's mainly for anything that's related to an asset purchase. You want to buy an existing building for your operational purposes. That will be considered, that will fall into the commercial mortgage space. Commercial mortgage space, we can usually amortize them. So it means that we can extend the loan amount over 20 years. So it's going to take you 20 years to pay. So in this scenario, you have, for example, sometimes the refinance. If you want to refinance, you already own your building. You would like to take out some equity out of your building. That will be the section where your project will be tied to. Conventional term loan, usually the amortization is close to 5 to 8 years maximum. Anything above that, you're now looking at the commercial mortgage long-term loan. Now, one of the most common questions business owner usually ask is, what do lenders usually look at when we are reviewing the financing, right? So, while something is worth noting is that every situation is unique and is different, right? Someone may have a good credit bureau, for example. Someone may have a good capital injecting into their project, right? So every business owner brings to the table a complete different story, right? So now what we like to call in the banking term is the 5 C's of credit. So I will go in depth more of what those 5 C's of credits are. So just as a whole, we have condition, character, collateral, capacity, and capital. Okay. So the first one that we have on the list is character. So character is so when someone comes to see me, of course I want to get to know the person. So the first C that we typically assessed is character, right? So in character, it's often about credibility, experience, and trust. Okay, so lenders will typically review the borrower's background. Okay, we will also review the industry experience. We will also review the reputation, and the most important, your credit history. So experience, to go in more depth. Experience. I wouldn't want to have an entrepreneur that comes to me and says, "Well, I've studied to become an engineer, but I want to open a dental clinic." It really doesn't align, right? So there's a huge gap, right? So we pay attention to that, and essentially, depending on where you are in your business, where we'll be able to gather all of this information is through our conversations. It will also be in your business plan, because that's where you tell your story, and that's where we generally get all the information needed when we submit an application to credit. Reputation, there's not really a way to really assess reputation. But that's something that we do, right? Like I can go Google a client, for example, because I want to make sure that the person that I'm dealing with, and there's also people talking in the community as well, right? So if someone did something and it's in the news, of course we will know, right? Because everyone talks. If it's in the news, you can just Google the person's name and you will see what they did, or if they have any issues with the law, right? And the credit history is the last thing, the main important thing that we look at. So the main uh, system that we use for to assess your credit bureau are TransUnion and Equifax. I'm pretty sure everyone here, if you're not familiar, you can definitely. I know all the banks usually have. They'll allow you to see your personal credit bureau. Oh, go ahead, Adrian. I see that you have a question.
Is this the same case with a corporation as well
Say
as
that again.
so is this the same process with a corporation?
Correct. Yes. So if you are, it's a partnership. If it's a corporation or it's a sole prop, it's the exact same process, right? So, and good question actually. It's not because your business, you're a shareholder in your business doesn't mean that personally you're not involved. And I'll go in more depth in the next slides, but it's the same procedure. You still needs to have a good credit bureau when we assess your credit for the business in general. The score that we look at, the minimum credit score that we will technically look at is 650. So 650 is the minimum, but it doesn't mean that if you have a score below 650, it isn't automatically no, right? Because we understand that stuff happens, right? Maybe when you were studying in school, you did not have any job, for example, and now you started to pick up making your payments. Stuff happens. So we will listen to the story, right? We will want to know what happened. What are you doing to improve your credit bureau? So all of these information items are taken into consideration when we do our assessments. Okay. Any questions on character? No? Okay.
Question: if it's a nonprofit organization and you have a series of board members, everybody on the board is checked as well?
Correct. Yes. We will check those. Now, where it's a little bit different than a corporation is that as when we have a non-for-profit, we do not take personal guarantee. And I will go in more depth in personal guarantee. So personal guarantee is the portion that tells the bank, the financial institution, that you have some skin in the game as well. Okay. But if it's a non-for-profit, we will check your credit bureau to ensure that the people that are at the board in the board of directors of that non-for-profits have good credit history and they are able to manage the fulfill the payments and help us put that trust to help us ensure that if worse comes to shove, you guys can find solutions and to repay that loan as well.
Understood.
Perfect. So the next one that we have on the list is capacity. Okay. So capacity usually refers to a business ability to repay debts. At the end of the day, we as the institution lenders, we want to determine whether the business generates enough cash flow to support its financing obligation. And to assess this, usually we will look at your financial statement, your bank statements, your tax return, entering financial statement. Usually, entering financial statement is the numbers that your business has been doing throughout the year, right? So if you have a year end, for example, of December 31st, and you come to me in September and say, "Well, I'm looking for financing," what I'm going to say, and if you are an operating business, I'm going to say, "Okay, can you send me your in-house financial statement? What's your year to date? How much money have you been generating since you started your year? So which will be January in this case. How much money did you generate since you started operating, right? So we'll take that in consideration and we'll also compare that um, to previous years, right? So if last year you generated 500,000 in revenue and by September you still $100,000 in revenue, there is an issue, right? So we will try to understand what has been happening, what made it difficult for you, because if you generated in a full year 500,000 the previous year, and the new year you by after 9 months you're still at 100,000, there's going to be lots of question mark, right? Are you going to be able, what's happening to your business? We would want to understand that. Debt schedule is more of what other commitments you have. We take that in consideration. So it's a little bit similar to getting approved for a mortgage. When you go to the bank, you give them your income or a personal loan, for example, they'll look at, well, what else are you paying for? What's the credit card payments that you have? What's the other, if you have a car loan, for example, other commitment that you have? They take that in consideration and they do their due diligence and make sure they need to make sure that all the numbers, you meet all the certain ratios. I believe retail side, the ratios that they're looking for, they'll call it TDS, TDS. You're looking at 40%, I believe. But on the business side, it's a bit different, where we'll look at the financial statement, or else there is no tax return. Unless you're a sole prop, we'll look at your the numbers that you generated from your business. But we look at that, and we also take in consideration the other existing loan that you have. And I think capacity is the most important for me, because without capacity, there's not, you can have a good net worth, you can have a good credibility, but if there's no capacity, it'll be hard to lend you the money. Any question on capacity? Okay. Second one on the list is capital. Okay, so the third C, capital refers to the owner's financial contribution to the business project. As lender, we want to see that the owner is also financially invested in the success of the business. So depending of the type of project, overall risk, sorry, the contribution may come from a form of savings, retained earnings, or a down payment, sorry, or a vendor's financing, which in some other terms we call it VTB, vendor take back, right? So you go buy a business, the seller tells you, okay, well, get financing for 70%, that 30% that you need to come up, if you don't have that down payment, I will finance you for the next 3 years over X amount of interest rate. So that's what a VTB is, right? So, like I said, the amount for the down payment can vary depending on the situation. So, some projects we may require you to put a smaller down payment. Some projects we may require you to put a bigger down payment. So it varies. It could be 10%, 50%, 30%. Sometimes we can even do the full amount without you putting any down payment. So it's case by case. And as a lender, when having capital helps us see that you are also involved in your project, you are also sharing the risk, because at the end of the day, we come in as a partner. We come in to help you achieve your project, but not to come take on the full risk, right? So we wanted to see some involvement of the shareholder as well in the project. Question? Perfect. Okay, so next one on the list is condition. So condition usually refers to the environments surrounding the financial request. So so this excludes factors. This includes factors such as the purpose of the loan, right? We want to know, what are you using the funds for, right? Because what we're trying to fight against is money laundering, right? So the project that you're requesting the funds for has to make sense, right? There is also economic conditions, the terms of the financing, and externally. So, for example, we may look at whether the financing is being used for growth, expansion, equipment purchase, or working capital. We may also consider broader economic factors and how they could affect the business and the industry over time. For example, a recent example that happened, we're looking at tariffs. Tariffs was one of the issue where if you are a business owner that works in the steel industry, and you come to us for a $2 million loan, of course you will be affected. And of course that will be taken in consideration when we look at the full potential risk that could happen if we proceed with the financing. So something worth noting is that, even if you are a strong business, sometimes you can also be impacted by market conditions, external challenges. So that's why majority of the lender will also look at the bigger picture when they're taking consideration a financing request. Okay. Last one, the last C is collateral. So collateral, um, when if you that's I don't know, Adrian, this is where I'm gonna turn a little bit on the personal guarantee. So collateral, when we do credit on the business side, and I'll try to give you an idea how different it is from personal. Personal, you have an income. You have an income that's been generating from an employer. Your employer will pay you every 2 weeks, or in some cases every week, or so every month. So you have that issued on a T form. But compared to a business, it's the income that your business will be generating. So especially if you're a sole prop, if you decide to sleep in, not work on Monday, money is not coming in, right? So when you come to see us, especially if you are a startup, when you come to see us and requesting financing, well, we won't go after you and say, oh, did this person make money on Monday? Did this person make money on Tuesday? No, right? So when we do the project, we want the project to be tied to something specific, right? Majority of the time in commercial credit, if we do a loan that's not guaranteed by a collateral, that means the individual has other mitigating factors. It could be a high net worth, for example, or it could be putting their personal assets as collateral. So when we're looking at assets, assets refers to anything tangible that we can secure against the loan. That could be the equipment that you're purchasing. That could be inventory. We don't do much, but that could be there's assets will also fall into commercial real estate. That's also an asset. Okay, that we can secure against the equipment as well. So all of these are part of the assets that we can secure against, and we have something called general security agreement. The general security agreement is what we will usually secure against your business. So if you have a business that's generates receivables, inventory, and has equipment, we will be first rank on those assets, basically. So if your loan is ever a default, the first resource that we'll go after is your receivables. Receivables is people that owe you the money. Okay, clients that paid and they still owe you money. So we'll go after your receivables. And we go through the list of the securities that we have on the loan itself. So if we don't have any commercial real estate, we want to look at that. We'll go to your what we like to call the GSA. So we look at your receivable. How much you have left in your receivables? Let's say there's nothing. We'll go down the list. We'll look at your inventory. Well, how much do you have left in your inventory, and how much can we sell to be able to repay that inventory? X amount. Okay. Look at your equipment. Well, your equipment's how much are they worth, right? What can we sell and recuperate to pay a portion of the loan? So we'll look at that. And the last resort, which comes back also to skin in the game from the shareholder, he needs to be involved, is the personal or corporate guarantee. So personal guarantee is usually what we will make you sign on top of the other collateral that we secured against your business. So that can go from, and it doesn't mean that if your loan is at default, the business will go after you personally, will make you sell your property, sell your cars. No, what is it shows credit is that, yes, it is personally, right? You took an engagement personally saying that, well, if the loan is at default, the business owner, will help you. I will help you repay that loan, right? So you will help us find solutions, right? So it's a way of saying that if your business is no longer making money, well, you're gonna have to help us find solutions before we reach the last resort, right? Maybe you might do some cash injection. Maybe you might bring on another investor that can inject more capital into your business, right? So personal guarantee usually can go from 10% of the loan to the full amount of the loan, right? Like I said, every scenarios differs from one another. Okay. Any questions for the last C? Good. Okay. Perfect. So now that we've reviewed the 5 Cs and how financing requests are looked at, I'm gonna take you guys into some of the programs that we have at Desjardins and what other programs are available to entrepreneurs in Ontario with the help of the government as well. The first one on the list that we have is Créavenir. Créavenir, we're still trying to find an English words for Créavenir. It is in French. So Créavenir is a program that allows the business owner to get financing. You can get a line of credit, which would be 15,000. What's good about this Créavenir is that the rate is very low. So you can get a rate of prime, which is 4.45% plus 0.5%. For those of you who have a personal line of credit personally, you may double check your interest rate and you see that you're probably not looking at prime plus 0.5. So if you have a personal line of credit, I believe you're probably at prime plus 4%, prime plus 5%. So it is a good program to take advantage of, and you can also qualify for a grant that can go to up to $5,000. Okay, so to qualify for this program, you have to be aging between 18 and 39 years old, and your business has not, the minimum requirement is that your business cannot be more than 3 years old, older. Okay, so it's 3 years and less. Okay, so usually this program is geared towards younger entrepreneurs and people that have a hard time accessing financing into the earlier stages of their business. Okay, there may also be some times where you come to us, you have your, and to assess this, will require your business plan, and I'm pretty sure Corinne can help you guys with setting up a business plan. But we'll look at the business, and we'll, even though this is more geared towards young entrepreneur, but we'll still go through the process of the 5 Cs. So when you are doing you're working on your business plan, it'll be good to touch on the 5 Cs because that's something that will be assessed. So when we get your business plan, we will send it to upper management, and they go. They'll have a meeting and decide on how much they want to give the grant for, and if the whole project makes sense, right? We would like to see a lot of community involvement, right? So what the main criteria that's being reviewed is how are you helping the community? What's the how can I say this? Well, what is your business going to bring to the community? Right. So when you guys are working on your business plan, I think that's something very important to touch on. The next one on the list that we have is the Momentum Fund. So the Momentum Fund is one of the most popular. So it's a program that helps businesses and organizations invest in projects that supports growth and development. So qualify for this program, and the grant can go up to 20,000. Okay, to qualify for this program, you need to your project needs to be tied to all these 9 different categories. So innovations, business successions, market and supply development, human resources, sustainable development, digital transformation, cybersecurity, governance, and business model optimization as well. You don't need to be a member to apply for this program. It's open to everyone. And once again, it's usually this one, there's no business plan because this one goes to the board, right? It's a bigger amount compared to the Momentum Fund. The Momentum Fund not the Momentum Fund, the Créavenir stays at the management level, but the Momentum Funds goes to the board. So the person who will submit the application for you needs to understand the project that you're trying to achieve. And the main, and I can't stress this enough, but it's the community involvement that they want to see, right? What is your project going to bring to the community, right? And I think if that's they able to justify the needs your business should be able to qualify for this program. So the application goes per quarter. So I believe they just ended the or first quarter application. So the next application will open from June until September. Okay. Now, in addition to programs offered with Desjardins, there are also programs that are backed up by the government. Usually, these are the programs that we will use for a startup, people in the restaurants industry, um, sole prop, anything. So this program, what it does is it's called the Canada sorry, Canada Small Business Loan Financing. So it's a program where it helps. What it does is us as lenders, if we add this program, it mitigates the risk because the government guarantees up to 85% of the loan. So what does that mean? So if your loan is ever a default, the government says, well, we understand that this person is a new business owner. We understand the risk involved with this. We will repay 85%, up to 85% of whatever is remaining if the loan is ever a default. Now you may ask, where is the other 15%? Well, the other 15% is where we will look at your personal guarantee, right? You will personally guarantee the remaining 15%. But don't forget that we also have the GSA, like I had explained initially. So in the GSA, you have your receivables, you have your inventory, and you have your equipment. So we'll look at all of that first, right? Go into the first list of securities, the GSA, what's remaining that we can use to reduce the balance. Okay, we have that. Now we'll look at your personal guarantee. How much did you sign for the personal guarantee? So that will be the maximum that you can inject to repay the loan. Okay, we'll do that. Now the remaining portion, we will go to the government and request the government to repay us in full for the remaining portion of the loan. So what can be financed through this program? You can finance equipments if you're buying equipment. You can finance lease. So let's say you a restaurant, you found a new spot where you would like to move your business to. We will finance the leasehold, meaning that if you want to buy to do renovations, rip up some walls, add a new kitchen, we'll finance that. And you could also buy a real estate. So what the government, what's the amortization, like the length of the term of the loan, sorry, will go to 15 years instead of 20 years if it was a regular conventional term loan. Okay. The loan amount for commercial real estate can go to $1 million. For leasehold and equipments, the maximum is 500,000. So there's leasehold, equipment, and intangible assets. So intangible assets which is goodwill, pretty much stuff that we can't touch. That is 125,000. So that would fall, for example, if you want a line of credit. Okay, we'll use that program and give you an amount up to 125,000. If you need, for example, I'll use the same example as the restaurant again. If you want to open a new restaurant and you need money for your equipment, you need money for your leasehold, and let's say it comes to 550, for example, the maximum that will be able to finance you is 500,000, because under this program, equipment and leasehold combined cannot exceed 500,000. Okay. The government also needs to make money, right? So they decide to take on the risk, to back up your loan. So they will charge you 2% on the full loan amount. So if you went for a loan of 500,000, they'll charge you 2% of that $10,000 that you need to pay upfront. In some scenarios, let's say we were able to finance you the full amount, which I had mentioned that it is possible depending on the project and the personal strength of the individual. If we're able to do that, for example, at 500,000, I cannot exceed the 500,000, so you need to put that in the account to yourself and pay that up front. But let's say you wanted a loan for 450,000. At 450,000, I'm able to include that 2% into the financing loan, so that it will be financed throughout the entire term. And usually the term for these ones varies from 5 years to 7 years. Am I missing anything on this program? And yeah, so oops. So one thing to add also for this program, the Canada Small Business Loan, is that uh, it doesn't mean that because it is backed up by the government, it doesn't mean that it is an automatically approval, 100% yes, that you will get approved, right? We look at, like I had mentioned, we'll go through the 5 C's, we'll do our due diligence, we'll look at the capacity of your business. Can the business support this additional financing? Can the business repay its debt, right? So we will still do our due diligence. The project still needs to make sense before we're able to move forward with the project. I believe that was my last slide. So with that being said, this really concludes the main portion of today's presentation, and I'd like to open to you guys if you have any questions, and I'll be able to answer you.
Okay. Thank you so much, Eric, for this presentation, and I hope that everyone will take advantage of this presentation. And if you have any question, you can go ahead and start asking, or you can type them in the chat. We read them.
Is it possible I can get an email to message my questions?
Okay.
Yeah, I can put my email in the chat, or I don't know if Kyle wants to send an email to everyone.
Yes.
Okay.
Okay, I can put my email, and if you want to follow up, you can follow up with me. And okay, I will. Okay. Okay.
Appreciate it.
Okay, here we go. Okay, so there's Andy, you want to know if the slides are available?
The slides, no, because I think we can't. I believe you recorded the.
Yes, I recorded the session, and I will
Yeah.
share it with everyone.
Yes.
Okay. And if you want me to send you the recording, you can put your email in the chat, and I will do that.
No questions, no funny questions, nothing, guys.
Yeah.
Faisal has a question.
Yes, thank you for the presentation, Eric. I just want you to basically point something out to the participants today. So let's say if someone wants to apply for any type of the loans or the program. So how can they go about it? Should they contact you directly, or can they go online on the Desjardins website and apply, or maybe give a quote to someone?
So depending on the loan amounts, usually Canada Small Business Loan can go from 10,000 to 1 million, like I had said. But you can just reach out to someone in branch. I have a certain threshold that I usually work on. My threshold is 750,000 and more. But there's definitely other account manager. We have a small business team that can where I can relay the file and sit down with the person, and we can definitely try to find the best way to help every individual. So just because I do 750,000 and more doesn't mean that I won't help a client that only wants 50,000 look for financing, right? So I'm still available, so you guys can reach out whenever you have any questions. Even if it's to pick my brain, feel free. Pretty open.
Thank you, Eric. So they can just come in on I know the Desjardins, the enterprise on Elm Street. So they can just come to Elm Street and request an appointment with someone at the branch.
Yes.
Thank you.
So, Eric, I have a question. What advice will you give to an entrepreneur who feel that they are not financially ready to start?
That's a good question. I think for me and from what I've seen since I've been working as an account manager is that there's no, like I said, there's not going to be a moment where you will, feel the need to go get additional financing and put yourself in debt. What I can definitely advise is that, even if it's a small business and you're starting new, track your transactions, track your in and out, because let's say you were a person that was selling food in their property, and now you come to me and say, well, I need more financing because my clientele has reached a certain amount of individual that I need a bigger space to cook for a larger audience, right? So now, if you come to me and we initially reviewing the whole application, but I'll say, well, how long have you been doing this? That's where I want to know the experience. What can you show me to prove that you've been operating for X amount of years, right? So I think in the earlier stages, it's very important to track the income that's coming in, the expenses, and really it comes with cash flow, right? So if you're rich, you will be able to know that, okay, I think I need financing. I need to have some sort of credit cards or a line of credit to help me with my business. And something that's worth noting is that, for example, if you have to pay someone an invoice, a payable, that like we'll usually like to call in accounting. If it gives you 30 days to pay that full invoice, well, you have 30 days worth your payable, but you can also, at the end of that 30 days, you can also pay on your credit card, and that gives you an additional 30 days. So just there, you just buy yourself 60 days to delay that transaction that needs to be paid, right? And that can 60 days on your cash flow can make a huge difference. So that's one of the advice that I would like to give.
Okay, thank you. Okay, is there any more question to ask? Okay, we still have time.
There's no bad questions, guys. Feel free.
Any questions? Okay.
Or if everyone wants to share the type of business that they have, or difficulties that they've had in the past in getting financing.
Yeah. Okay. Okay, there's Joe. Joy has a question.
Go ahead. Yeah.
Yeah. Okay, Joy, you can unmute yourself. Okay.
Thank you, Eric, and thank you, Karen, for this presentation. My question is, I don't know how to put it as a question, but there are some kind of business that we do. We want to say that we need some form of financial support, maybe by taking a credit or grants and all that. But it's not like it's a regular business. It doesn't come in like you're making daily sales or that. Would you advise that one goes into that kind of, one takes credit facility for it? For example, I run a business called the Postpartum Care. And sometimes we have clients who want our services, but they are not able to pay, and they feel that it's too much for them, and you're looking at how can I make this more affordable for them without shooting myself in the foot. Also looking at opportunities to talk to maybe government organizations like the Public Health or like the Ontario Health that can partner with me to say, oh, I'll pay part of this for this client, and then the clients can pay part of their the cost of their care. But somehow it's difficult putting all these things together. What would you advise for a business that is it is very essential, it's very important? What would you advise financially?
Yeah, I think also, you've said something very important, is that you don't want to shoot yourself in the foot, because even if you're operating part-time, you still have to fulfill your monthly expenses, right? So, um, I think it's good. My advice will really be on looking at how the government can help, those clientele. But um, I would say maybe, and I'm not going to tell you how to run your business, but I think if you want to also like shift your focus on the people who can afford it, right? Because um, it's not, you don't want to, there's a thing that says, um, I would rather have 1,000 clients that pay me on a regular basis every day. Whenever I need my money, they'll pay me, than having hundred and thousand of clients where every time I need money, it's a whole headache, right? So I think initially it's maybe targeting the people that you want to, that can afford your services, right? And after, once you're growing, you've got a pull of the entire industry, and you can try to bring on those clientels that need, that can maybe afford the program and the service, and look at government backed up programs that can definitely help you support those ones that can fully pay that in full. Now, financing wise, it's, even if you're operating part time, it's still possible to give you credit. But it's what we need to ensure is that, are you going to be able to repay it, right? So, and I think in this case, the best suitable financing product that I can suggest you will be a line of credit, because it is revolving, right? So you borrow and as much as you need, and you repay it whenever you have money that comes in. Okay, because you don't want to put that over a term loan, because term loan, once we disperse, after 30 days or after 2 weeks, you got to start making payments, right? So if you're not getting the clientele, and you are using money to help your operational needs, and it's in the term loan, you might dig more bring more problems to yourself, because you will start having cash flow issues, right? So I think it's like I said, I'm not going to tell you how to run your business. You are free to, do use any approach, but I think the most important is to maybe shift the focus a bit on, the individual that wants to support your business, and will be able to pay for your services on a recurring basis. I hope that answers your question.
It does. Thank you so much. Thank you
No
so
problem.
much.
Anything else?
Okay. I was muted. Okay. No more question? Okay. Faisal.
Yes, I have another question for you, Eric. So,
Mhm.
just to basically put light on something. Is there any fees if you have a credit line or credit cards or a loan? Is there any fees associated with that, just to have the account open with Desjardins?
Yes. So if you are a non-for-profit, our fees is, I believe, below $4. I think it's $2.95 or $3.95. If you are opening a regular checking account, you are paying $5.95. Um, and that gives you access to online transactions. So if you only do online transaction, you don't do any transaction at the counter, meaning depositing checks at the counter, taking funds out of your account at the counter, you're gonna be paying $5.95. And every time you exceed that, you're gonna be paying per transaction. Now, the Créa Avenir program, we require you to have an account with Desjardins, the Desjardins business. So you will be paying the $5.95 for that, and we don't charge per se, but the line of credit and the credit card comes as a full package with the grant that you can get with the line of credit, right? So I believe Visa will charge you $22, 17 or $22 to have this program. Now, and it's tied directly to the line of credit. So if you don't use the line of credit, you will only be charged $22. Let's go with $22. Now, if you use the line of credit, you'll be charged whatever you've borrowed on the line of credit interest wise, plus the $22 that gets charged every month. If we were to do a term loan and line of credit, commercial real estate internally, we charge usually, and it's pretty common throughout the entire banking industry on the commercial side. To review your financing application, we charge 0.25% of the loan amount, right? So if you come to me and say you want $100,000, you're going to be charged 0.25%. And that usually is paid at the disbursement of the loan. So it's not like you have to put it in the account. On some cases, I don't think it's the case here, but they're depending on the size of the financing. So if you're dealing in the million, we'll require that fee upfront before we go ahead with the application.
Okay, thank you. A follow-up question on that: like when you compare the Jardin fees to the other institutions, is it like is it competitive, or like is it lower?
I think it's very competitive. Especially I don't know in terms of financing fees at the other institution, but I think checking account wise, yeah, it's very competitive because $5.95 and you get everything unlimited. And I feel like it's rare that people will do transactions on the counters, and unless you're dealing with an industry where there's a lot of cash. It would be best to just be up to a bigger the upper package. But I think when it comes to those fees, I think we are pretty competitive. Now the fees related to the financing, it really depends, right? You can have institution that will say, well, we're not going to charge you up front, but we're going to be charging you on a monthly basis. Or you can have an institution that say, well, this client has a big potential, he can bring us additional savings opportunities, so I'm going to waive that fee, right? So the fee has to be charged, but there is room for negotiations when it comes to in the financing process.
Thank you for that.
Thank you, Eric, and thank you, Faisal. And I think that's there's no more question. If there's follow-up questions, you can send them to me. I put my email address in the chat box, and the replay of this webinar will be available by tomorrow. Thank you again, and I was happy to learn about the program that Desjardins is offering, and the Créer Avenir and the government program. If you need you need more information on that, you can send me an email, and I will forward it to Eric for the follow-up. Thank you again for being here with us, and I wish you a good afternoon. Thank you.
Thank you, everyone.
Thank you. Bye.
Thank you. Bye.